Joining me here at Beaver Creek, we've got my close friend, John-Mark Staude from Riverside Resources. John-Mark, thanks for taking the time to do this.
Great to be with you, Steve.
So let's start off talking a little bit about precious metals. Here we are at Beaver Creek. We talk a lot about gold and where it could be heading. What's your assessment right now of the gold market?
I'm really bullish on it, honestly. It's amazing on the gold market. Gold prices have gone up. There's such a large need for gold. And also, I think with interest rates and with overall the United States, definitely the challenges in the world, kind of in terms of instability, gold is underpriced and has a lot of room to go to the upside.
Now,
I really see that. I do.
Yeah, you're usually pretty on point about this. I remember back when I first met you I think it was around 2020, when gold topped out there during all that stimulus money that was coming in. I thought gold was running to $3,000 and it kind of topped out there. And I remember you actually calling that top to me. I don't know if you did it on camera, if it was privately, but I recall you doing that. Do you think we're anywhere close to a top here, or how much legs do
I'm really concerned by what the Treasury and what happens to gold on the price and the alternatives, derivatives to gold that kind of cap out gold and push it down. Fundamentally, it's hard to get gold metal. And the demand for gold metal needs to grow, and I don't feel it's actually there right now. When I go and buy gold, I can buy gold now. And before it was hard to get. Right now I can get it. So it isn't topping out. It's not being this, so it's still available. And so there's still room to go to the upside and get gold metal. I think that gold ETF is definitely hinders gold, and overall you see a push of selling of gold, of shorting gold, and I definitely see that that's affecting the gold price. So it's not topped out. There's huge need for gold, and people are coming to us looking for projects, looking for production. We're constantly being asked for, can we have gold metal? Because people want the metal.
Now, you guys also have done some stuff in silver, obviously. You're considered one of the top exploration thought leaders in Mexico, which is quite frankly the land of silver. How bullish are you on silver right now?
Silver even more so, and I think that more than gold, silver is consumed. Silver is needed in the solar industry. Silver is needed in the industrialization, and we do see a pullback kind of in China. China overall is having the flu, some challenges right now for China, and China has been a place that's been creating a lot of solar panels and consuming silver. So maybe we see a bit of a calmness, but I think that there's a demand for silver. I think that the ratio of silver to gold, silver is the poor man's version of gold. So I'm bullish on the ability of silver, and it's so difficult to get new mines. The mines are small. There's not a lot more production. So I'm amazed that we're able to consume silver. There isn't that much silver in people's anymore in terms of personal silver. So silver basically needs to be consumed. It's not that easy to recycle. So I think silver can go up a lot, and it's difficult to get new mines.
Now, we've obviously had you on here a whole bunch of times. We did our first episode of DD on the Go with Riverside, which we're grateful that we got to share that experience with you. But there's still going to be some people watching this who are sort of going through our content this week, and they're going to be wondering what's Riverside's story. So maybe if you can just take a quick minute or two just to tell our audience at the high level overview of Riverside Resources.
Well, Deep Dive has been with us for so long, and we really appreciate it. Riverside is a generator company. We've been working for 17 years. We have a strong cash position, over $5 million cash. We have a very nice tight share structure. After 17 years, only 75 million shares out. We have generative projects, both in Canada and Mexico, and we have partners drilling. Today we announced the drilling with Fortuna Mining, for example, and we have royalties. We have 8 royalties in the United States, Mexico, and Canada, and we're very excited to have a nice royalty portfolio.
So you guys have had some pretty big news recently in terms of being able to generate those projects. One of those is with the La Union project, which is where we went to on that first episode of DD on the Go. You guys recently optioned out the property. Can you walk us through the deal structure and why shareholders should be excited about the transaction?
Totally, and it was great to go with DD on the Go. Your team out there with us out in the field, going and seeing the project is a very real project. And secondly, with a partner, Quest Corp, we're excited because they're able to deploy the capital on the project. The shareholders of Riverside benefit. First off, Riverside gets 19.9% if Quest earns the interest into the project. If they don't complete the earned interest in the project, then we get the project back. On signing, we're getting 9.9%. Then we'll get another 5% after 1 year. The expenditure will get $1 million firm commitment in the ground. The corporation Quest is raising at least $1.5 million to do the exploration and do the work. So Riverside is the operator. So as Riverside as a shareholder, we're delighted. We're getting the project to move ahead. We know we like the project. We're going to end up with a significant ownership in the corporation if they get it. If they don't complete the earn-in, the project is advanced in good standing. And the thing is that for us is it's moving ahead multiple projects of Riverside's portfolio.
Does that mean that you guys are going to get some cash flow as the operator of the project?
It does. We're getting cash on signing, we're getting cash through the deal, and we're getting cash flow. We get 10% of the money that's spent in the ground is a fee for operating, and it costs a lot, and we recover our costs. So basically, we're recovering our costs, and then we're getting a 10% management fee. That management fee, it costs a lot more to operate and do things, and it is, but it definitely helps add to our balance sheet. So our balance sheet is very solid. When we were on DD on the go, we had $5 million. Today we have $5 million. Riverside, how many companies can you keep going to and they still have no financings, no warrants? We've been able to run our business and the business recovering our costs.
So you guys also made an announcement today at the Cecilia project. There's going to be some drilling. What can you tell us?
We're super excited working with Fortuna Mining. They're an operator. They have at least 5 mines operating. They have a very major mine in Mexico that produce the equivalent of over 100,000 ounces a year of gold equivalent. And they're working with Riverside on the Cecilia project. Cecilia project, drilling with them, 2,500 meters. 8 holes. The first two holes are going for deep, looking for the big system around the dome. And then I think we've been out with you guys out to Cecilia project, and it's great. And at Cecilia project, the thing that we really like is big scale. 60 square kilometer project, big areas. So with Fortuna, we'll be drilling a few test holes in some of the other targets. We have over half a dozen targets overall. We'll drill 3 of those with Fortuna Mining.
So what's the big focus of the company now? You guys just optioned out 2 of your key assets. What's the focus now?
So those 2 key assets are in Mexico. Riverside has been working a lot to diversify into Canada. Our key assets in Canada are in Ontario. In Ontario, around the Geraldton Gold Belt. Equinox Gold has built a giant mine, the Greenstone Gold Mine. The Greenstone Gold Mine is now the 4th largest open pit gold mine in all of Canada. And they've just built it for over $1.5 billion, this giant mine. Riverside has properties, the Oaks Project, the Pichette Project, the Duck Project, in the same greenstone belt. And so for us, focusing on Canada, progressing that portfolio, we've actually put those projects into a subsidiary company of Riverside called Blue Jay Resources. It's owned 100% by Riverside, but we're so confident that it can move ahead that we've actually helped already make the next step of creating a company inside Riverside called Blue Jay. That's a really good step for Riverside for 2025.
And now it's really just a question of waiting for those for capital to start flowing into junior names, right? Like we're seeing it. It's maybe with some of the majors, we're starting to see some M&A. We're starting to see some activity, but we're still not quite seeing the money trickle down to the juniors in terms of open market buying.
No, but it's definitely coming in the financings. And so that's exciting. So the financings, at least to the development companies like Skeena Resources getting $100 million. And we saw the great success of Dolly Varden getting capital coming in. These are really good companies and they're doing good projects. And so we see our Ontario project as having being lined up for that type of capital to be receiving. You're totally right. It hasn't come into the equity. And so we have to help create the projects that the equity can go up on. So if you own Riverside, you get the Mexico exposure, the drilling with the partners, the royalties that Riverside has, and the Canadian portfolio. That gives you 4 different catalysts.
And one thing I like, and I got some friends that are long only microcap managers that are typically in the sort of cash flowing microcaps. And I know one thing that they love is when they look at a cap table and they don't see a whole lot of warrants that are going to create a ton of overhang in the stock. And my understanding is that Riverside doesn't have any outstanding warrants.
That's correct. Riverside's been lucky enough to be able to operate now. We haven't had to do any financings for 4.5 years. Kind of in that way, we've put a little bit of money towards the Blue Jay, towards that, and we have no warrants. We haven't done warrant financings in half a decade.
So, John-Mark, if I am an investor watching, which I am an investor, what am I looking out for over the next year? Or we'll
Next
just say,
year is awesome.
or even we'll get a little bit more narrow. The remainder of the year.
So first off is the drilling with Fortuna Mining. Announced today, rigs are turning, we'll get the drill results, that'll be great. So that by the end of the year is a really super exciting for us. We have multiple targets. Secondly, the Quest Corp deal, that's good with Union. Can they raise the money and will we get that closed? That's great. If not, the project's still with Riverside, good either way. The third thing is the progress with our Ontario portfolio. And so in the next year, definitely see us moving, having good news with that, with the spring, with what we're doing right now in the field. We'll have results over the winter into the spring. And so we're really set up well with those different catalysts for Riverside.
Well, John-Mark, thanks very much for hopping on here, and I hope you have a really productive week of meetings.
I'm glad you're doing so many videos here. Thank you, Steve.